Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, the 23rd of October, 2007. The market's closed. S&P 500 did add to its gains from yesterday. It recovered another $1.24, about 0.8%. The big strength, though, obviously was in the NASDAQ, as we'll see in a minute. You can see that the level of this prior inverted head and shoulders pattern we were looking at months ago, this neckline did hold as support, as well as the rising 50-day moving average. So 150 is going to continue to be an important area over the next couple of weeks. The market is starting to show diminished volume on this rally. That's one reason for just a little bit of concern. Although we saw that the volume was diminishing the whole way up over here. So you don't want to put too much weight into that. But the pattern has been here, diminished volume on these rallies in the S&P 500 and increasing volume on the way down. So that's something to keep an eye on. It's not a reason to sell short, but it's just something to be concerned about because net it's saying that the sellers are more aggressive than the buyers, even though we've got an uptrending market. When we look at the 10-minute time frame, we still have a declining 5-day moving average, and that's exactly where this market ended the day, is just at that declining 5-day moving average. It'll be interesting to see if this market can get back above there. I think the best way for that to happen would be probably a pullback down towards 151 and a quarter. Let this 5-day moving average flatten out and then break above it. You can see that the market has expended some good energy with these higher highs and higher lows since the gap lower on Monday morning. So it's kind of a little bit of a concern to me that the market hasn't been able to get back above that 5-day moving average, and we've got this, this downtrend line here. Looking at a 30-minute time frame, we can see that a little bit more clearly. And let's take a look and see where this market may encounter some resistance Fibonacci-wise. And you can see right here that we're at one of those levels, the 38.2% retracement of the level from this high back on October 11th to the low that we saw on Monday. We've retraced exactly 38.2%. You can see, just looking to the left in here, that that is also an area where we saw prior support, which might be offering a little bit of resistance. So let's just kind of draw a line straight across and see what that looks like here on the daily time frame. And it doesn't look like a huge level of resistance. So going back to this, you can see the next potential level where this market might be turned lower for resistance is that 153 level, and that's where we had this market gap down to as well. So I still think you've got to continue to be defensive in this environment, and the buyers really haven't fully regained control of the S&P 500. That's the way to look at it. We've got a lot of mixed signals here. If we take a look at the semiconductors, they were down big earlier during the day. But you can see they recovered fairly well. But again, the range that we had been tracking was this 480 to 510, and the market broke down through that 480 last Friday and has been unable to rally back up above it. Today we had Texas Instruments, or last night Texas Instruments reported earnings. That's what dragged the group lower. So I guess in a way it's kind of impressive that it wasn't a lot worse given the weakness in Texas Instruments. But the semiconductor index, again, we've got a declining 5-day moving average. We've got this 480 level that was tested yesterday afternoon, tested early this morning, and that's going to continue to be a potential level of resistance for this market. Above that is 490. And like I said yesterday, I don't think you want to trust the long side in this market till we get at least back above 500. And again, we've got a declining 10, 20, and 50-day moving average with the 10 below the 20 below the 50. And it used to be that the market, the NASDAQ, couldn't rally without participation from the semiconductors. But again, we'll see in a moment that that's clearly not the case in this market right now. The Russell 2000, we've got this market has found support near that $80 level. Really is kind of going to continue to be the important level going forward. That's where we're at, that 50-day moving average. We closed back above that, and the 200-day moving average here at about 80.5 yesterday. Again, we had lighter volume on this recovery. We've got the 10-day moving average crossing down through the 20. A lot of times that just represents indecision and indicates that the market might need to consolidate more through time. So we've got this level. Obviously, the 80 level is the most important level for this market as support goes. Particularly, when you look at this, it was tested down here this morning. Yesterday, what I was saying was that I thought that we needed to see the market get above 81.25, and it did do that today. So I think we want to give the benefit of the doubt in the short term, starting to look actually more neutral than anything. It looks like this downtrend line has definitely been broken. You can see that it gapped above that this morning. And look how that trend line coincides with the 5-day moving average, by the way. But we do have these higher lows. I think same thing that I kind of said for the S&P 500. If we could see a pullback, maybe down towards about 80.50 or so, 80.70, 80.50 to 80.70. If we could see a pullback to there, that 5-day moving average might have a chance to flatten out, and then it could push higher. We've got a little bit of potential for resistance at about 82.25, and then the looking at a daily time frame, that's also the approximate location of this 10 and 20-day moving average where they line up. So I still think that when it comes to the IWM, the Russell 2000 overall, you want to continue to be somewhat cautious in here. We've got a lot of mixed signals. Where we don't have mixed signals is in the NASDAQ 100. This just continues to power forward, being led higher by Apple, by Research in Motion, Google. I read somewhere that I think those three stocks have accounted for about 60% of the gains in the NASDAQ 100 this year. I don't know if that's true or not, but otherwise I would cite, I'll try and find the source and cite it on my blog later. So we've got continued strength here. I said yesterday that the market needed to get back above this 53.20, above 53.20, where the benefit of the doubt goes back to the buyers in the short term, and it looks like that's exactly what we've got here. Again, it was obviously powered in large part by the big gains in Apple, and Research in Motion had a huge day today as well. Google also at all-time highs. So when you have those stocks hitting all-time highs, you're going to see this NASDAQ breaking out to new highs as well. Again, it's obviously not all-time highs, but it is significant multi-year highs in here. So this market is actually behaving very well. It finds support at a rising 10-day moving average early on. The pullback got a little bit deeper, shook some people out below that 20-day moving average, but now it's at new highs, and the market continues to act great. I think this market, particularly when you look at the way the semiconductors are acting, the strength in the NASDAQ 100 versus the S&P 500, it's really a stock picker's environment, and that's where you're going to be making your money, is on individual stocks, not by buying the market overall.